Good morning, friends. Imagine identifying the next big wealth creation opportunity before it becomes mainstream. 20 years ago, it was IT. 10 years ago, it was telecom and digital payments. Today, it could be a data centers. Every chat GPT query, every UPI payment, every Netflix stream, every cloud application depends on data centers. And here is what fascinating. Global technology giants like Google, Microsoft, Amazon and others are investing billions of dollars to build digital infrastructure in India. The companies helping build this future are listed right here on our stock exchange. Today I will analyze 5 Indian companies that could become major beneficiaries of India's data center and AI infrastructure boom. We will look at their business models and financial performance, institutional ownership, future growth plans, and the key triggers investors should watch. And make sure you stay till the end because my final stock is an underappreciated infrastructure play that many investors are completely overlooking. Before discussing the stocks, let's understand the opportunity. India's data center market is currently valued at nearly 10 billion US dollars and is expected to exceed 21 billion dollars by 2031. That's a growth rate of approximately 13.5% annually. What is driving this growth? Artificial intelligence, cloud computing, data localization regulations, digital banking, 5G networks. India's operational data center capacity stood at approximately 1150 megawatts in December 2024. By 2027, it is expected to reach 2100 megawatts, and by 2030, projections suggest capacity could exceed 8 gigawatts. That's a nearly 7 times growth within 6 years. Whenever a sector experiences that kind of expansion, investors should pay attention. So, let's examine the company's position to benefit. Let's begin with a stock that most investors rarely appreciate with data centers, KEC International. When investors hear KEC, they typically think of power transmissions and EPC projects. But here is the reality. Every hyperscale data center requires massive power infrastructure before a single server can operate. Substations, transmission lines, electrical systems, civil infrastructure, and this is exactly where KEC operates. As more data centers are built across Maharashtra, Hyderabad, Chennai, and other major hubs, infrastructure contractors like KEC become critical beneficiaries. Now let's look at the numbers. The company reported revenue of approximately rupees 22,000 crore. Profit after tax grew by nearly 70% in financial year 25. Its order book has crossed rupees 44,000 crore, the highest in the company's history. Institutional confidence remains strong. Foreign institutional investors hold approximately 18%. Domestic institutional investors hold approximately 15%. Promoters hold around 55%. What makes KEC interesting is that investors are not paying a premium valuation for a data center story. They are getting exposure through infrastructure growth. It's not flashy, but it is a very practical way to participate in India's digital infrastructure expansion. Next comes a company that operates behind the scenes, Sterlite Technologies or STL. Here is a simple question. How do data centers communicate with each other? Through optical fiber? Lots of it. Every hyperscale facility depends on high-speed fiber networks for data transmission. As data center capacity expands, fiber demand grows alongside it. Sterlite is one of India's leading optical fiber manufacturers and solution providers. The company already works with major data center operators including Nextra, NTT and STT. Its current order book exceeds rupees 11,000 crore. Institutional ownership remains healthy. Foreign institutional investors own approximately 11.47%. Domestic institutional investors hold around 10.84%. Now, there is one risk investors should understand. The company operates with relatively higher leverage with debt equity around 1.2 times. This makes STL a higher risk, higher reward opportunity. If data center investment accelerate as expected, STL could benefit significantly from increased fiber deployment and network expansion. At number 3, there is India's corporate giant Reliance Industries. Most investors focus on telecom, retail and energy, but Reliance is also positioning itself aggressively in digital infrastructure. Through geo platforms and global internet data center, the company already has a presence in this space. What's exciting is the scale of future ambitions. Industry estimates suggest Reliance could invest between 20 and 30 billion US dollars in data center infrastructure over the coming years. When Reliance enters a sector, it enters with scale. Financially, the company remains one of India's strongest business. Net profit stood at approximately rupees 79,020 crore. Institutional ownership remains robust. Foreign institutional investors hold approximately 23.5%. Domestic institutional investors own around 16.2%. Reliance is perhaps the safest way to gain data center exposure while benefiting from multiple growth engines across telecom, retail and energy. Coming in at number 2 is a company that combines stability, scale and future growth potential. Bharti Airtel. Now most investors know Airtel as a telecom giant. But the hidden gem inside Airtel is Nextra Data. And Nextra is already one of India's largest data center operators. The company currently operates more than 128 data centers and 12 large hyperscale facilities across the country. Its market share in India's data center industry is estimated at around 15%. But here is what makes the story even more exciting. Airtel is one of the key partners in the massive Vizag AI campus project being developed alongside Google and Adani. In this partnership, Google brings the AI workloads, Adani provides the infrastructure ecosystem, and Airtel contributes connectivity and data center expertise through Nextra. This is exactly the type of project that can create long-term value. Now let's examine the financial strength. Revenue exceeded rupees 2.1 lakh crore. Net profit stood at approximately rupees 33,823 crore. Return on equity is close to 33%. EBITDA margins are nearly 60%. These numbers demonstrate a highly profitable and scalable business model. Institutional ownership is a particularly impressive. Foreign institutional investors hold approximately 27.42%. Domestic institutional investors own approximately 19.51%. These are among the highest institutional ownership levels within India's data center ecosystem. And there is another potential catalyst. If Nextra is separately listed in the future, investors could witness significant value unlocking. For investors seeking a combination of growth, quality and institutional confidence, Airtel remains one of the strongest opportunities in this space. And now we arrive at the company with perhaps the most direct exposure to India's data center expansion story, Adani Enterprises. Most people associate Adani with ports, airports and energy. But one of the group's most ambitious business today is Adani Connex. This is a 50-50 joint venture between Adani Group and global data center specialist EdgeConneX, and the scale of expansion is remarkable. The company already operates approximately 55 megawatts of capacity across Hyderabad, Chennai, Mumbai and Noida. But management is not thinking in megawatts, they are thinking in gigawatts. In the latest quarter, Adani Connex secured a new hyperscale order worth 358 megawatts. This increased its cumulative tie-up capacity to more than 560 megawatts. That represents one of the largest data center pipeline among listed Indian companies. Now let's talk about the biggest growth trigger. The Google Adani Airtel Vizag AI campus, estimated investment approximately 15 billion US dollars. Expected computing capacity nearly 1 gigawatt. Construction has already commenced. Industry experts believe this could become one of India's largest technology infrastructure projects. Now let's look at the numbers. FY26 revenue exceeded rupees 1,469 crore. Net profit increased by approximately 31.6% to rupees 9,339 crore. Institutional participation remains healthy. Foreign institutional investors hold approximately 11.65%. Domestic institutional investors hold approximately 6.72%. Promoters continue to hold a substantial 73.97% stake. This high promoter ownership reflects management's long-term conviction in the business. The investment thesis is straightforward. As AI adoption accelerates, cloud demand rises, and data localization requirement increases, data center demand is expected to expand significantly. Among listed companies, Adani Enterprises arguably offers the most direct participation in this long-term trend. For investors comfortable with execution risk and looking for aggressive growth potential, Adani remains one of the most closely watched opportunities. Let's quickly summarize. If you prefer a conservative diversified approach, Reliance Industries, strong balance sheet, massive scale, future data center investment estimated between 20 and 30 billion dollars. If you want institutional confidence and operational leadership, Bharti Airtel, strong cash flows, high FII ownership, extra growth potential. If you are looking for the most direct data center growth story, Adani Enterprises, large expansion pipeline, major AI infrastructure projects, strong promoter commitment. If you prefer a supporting infrastructure play, KEC International, massive order book, power infrastructure expertise, attractive valuation. And if you are willing to take higher risk for potentially higher reward, Sterlite Technologies, direct beneficiary of fiber demand, growing data center ecosystem exposure, significant operating leverage to industry growth. Now I want to know your view. Which of these 5 stocks do you believe has the highest potential over the next 5 years? Adani, Airtel, Reliance, Sterlite, or KEC? Comment below and let me know. I personally read your comment and would love to hear your perspective. If you found this analysis useful, please hit the like button. It helps this video reach more serious investors. And if you are interested in research-driven investing, subscribe to Finova Solutions, because every week I analyze emerging sectors, high-quality companies, and long-term wealth creation opportunities backed by data and fundamentals. Thank you for watching, and I will see you in the next video. Jai Hind. The views expressed in this video are purely for educational and informational purposes and should not be construed as investment advice or a recommendation to buy or sell any security. Stock market investments are subject to market risks. Past performance is not indicative of future returns. Investors should conduct their own research and consult a SEBI-registered investment advisor before making investment decisions. I, Shankar Pawar, am an FII-registered mutual fund distributor ARN 326614. All financial data presented has been sourced from publicly available company filings, stock exchange disclosures, and industry reports available as of June 2026.